We got a little more Fed talk today, and it seemed like the market was originally expecting the Fed to be a little bit more dovish. The market had a hawkish reaction that we all know the Fed obviously doesn't want the market to panic and to freak out and for the economy to change direction. The Fed ultimately wants things to continue going in its current direction, and it seemed absurdly dovish today. There was no indication of any sort of hawkish talk. Powell did say one thing, and this is what we're going to be focusing on here, and that's inflation is uncertain. It's uncertain what the effects are going to be, and that plays into our current positioning. We are positioned knowing that inflation is uncertain. We are taking that risk that we can't say with certainty what's going to happen, but it's our projection that certain things have taken effect in the market through fiscal and monetary policy that have laid the groundwork for inflation to occur over the years. And as we said in yesterday's video, if you Google and do your research or look in any sort of economics 101 textbook, you will see that output effects begin to occur after 6 months of inflationary occurrences, whatever is, catalyst. And monetary inflation begins to occur after a year. And that is right on schedule with what's happening now. So I'm at least remaining pretty convinced that we will see some inflation. I think it's more likely than deflation. I've been reading the Fundstrat FS Insight research. They highlighted some additional multiplier on all this, and that is a massive transfer of wealth from baby boomers and generation above them, I assume, to millennials and younger generations. The baby boomer generation is rather large and happened in a relatively quick, concentrated period of time. So that is money that's going to move into younger generations. And this is, coinciding with previous inflationary cycles. So demographics do tend to run a lot of things. And this is an additional demographic trend in addition to or multiplying with the inflationary forces we've seen. And the market's rallying. We like to see this. It would be one thing if, Powell, I guess the market isn't considering much of inflation. But typically, up until the last couple weeks, the market has heard the term inflation and sold off. And then the last couple weeks, it started rising. I don't know if this is the market listening to uncertain. Inflation is uncertain. That's kind of keying off. Sorry, just my shoulder's getting a little tired. Did a big workout today. I don't know if that market's keying off Powell's, notion of uncertainty and the fact that he said it's in the last meeting that it is coming in a little hotter and possibly more structural than was initially expected. But we think inflation, at least I think inflation over here, is good for the market and good for the positions we've been talking about for a very long time. So we're remaining there. We're keeping with that. And that's it for today. Good news across the board. Nothing coming out concerning me besides the Fed, but I'm not concerned by that. I'm just playing to win. And I'm playing to win in the cyclicals, energy, and any other sort of commodity inflation trade like mosaic and fertilizer. We all know we had to increase crop output because of inflation and demand. If there are price increases, and I talk to farmers, there's likely going to be a phosphate deficit soon. Mosaic is a winner. So until next time, peace out.